I know times like this, you just take it slow. I fall asleep in the pillows. She got my heart in a chokehold. And there she goes.
Hello everyone, this is Ahmed Shawi by Liquidity Club. Today is the Sunday, the 10th of September 2023. I'll be going over the markets that I'm reviewing: DXY, ES, NQ, Dow, basically the indices, and the Forex market, which are the two pairs, the Euro USD, also known as the Fiber, and the cable, the Pound USD, also known as the cable. So let's start and see what has happened last week. Let's get started. Starting with the DXY, we have the weekly chart here. As you can see, we swept the buy side liquidity that I've been mentioning all the way from the last weekly review. Please refer to the last weekly review, which is the 3rd of September 2023. There is a weekly review that is posted on my YouTube channel. I've been mentioning that I want to see the consequent encroachment of this candle, of this buy side liquidity, of this candle's high, the premium wick, the consequent encroachment of that. I want to see price to reach to that as means of a drawn liquidity and the buy side liquidity. Price has done that perfectly here. And notice now we have a breaker here. Since we have a low that swept, then we broke the highs. Now this would be a breaker. This is the high of the breaker. Now if we trade back to it, which also overlaps with the high of this candle, which is a potentially a fair value gap. If we next week, if we close anywhere here, this will be potentially fair value gap. Price can refer back to it, accumulate more orders at it, and also it has a breaker that is overlapping with it, and then reach to the buy side liquidity. Now my next targets are going to be the weak consequent encroachment and the buy side liquidity. I want you to pay very close attention that after we take a major liquidity pool, such as the buy side liquidity pool that is shown here on the weekly chart, you will have to be nimble in your trades, and you have to be referring to the intraday liquidity pools, because one of three scenarios can happen here. It can be either accelerating to the upside and reaching to the buy side liquidity and the weak consequent encroachment that I have highlighted here, which are the 105.883. This is the terminus for me, and the weak consequent encroachment as 105.260. Now if we trade above the weak consequent encroachment and close above it, I would like to see price treat it as support and sends price to the buy side liquidity. Second scenario can happen, and price can enter a state of consolidation here. The third state that can happen is an immediate reversal towards the sell side, because that would be justified as price has already accumulated buy orders here, and smart money has already accumulated buy orders here as a turtle soup, and they can reverse it and buy these orders below these lows from the retail who have their sell stop below these lows. So yeah, that's pretty much it for the weekly chart. I just really want you to that we have been reached to our day, the drawn liquidity that I've been mentioning since the last week. Going to the daily chart here, there's a small fair value gap that's shown here when we reach to the buy side liquidity, and if we're going to be reaching to the higher prices, I want to see this fair value gap give us some support. Also notice how we swept the previous week high and the previous month high that I have highlighted and mentioned in the last weekly review, and we did perfectly do that in just one candle. This is the weekly bullish breaker. It's just nested from the weekly chart all the way to the daily chart. As I've mentioned, I'm holding no bias now for DXY, or also known as DEXY, but I'm favoring the run towards this buy side liquidity. if we reach to that buy side liquidity, as I mentioned, three scenarios, one of three scenarios can occur, and it can be only two if we reach to the terminus, which is this buy side liquidity. It can either consolidate or reverse, because going further to the upside, it would be overextended to the premium, and prices eventually needs to reprice to discount that might permit it to reach for further premium. This is a close look up on the DXY. It's just a bit zoomed in. This is the fair value gap that I've mentioned, and how I want to see price supporting price here if we really want to see higher prices. So yeah, that's pretty much it for Taxi. Going to the ES. This is the weekly chart. As you can see, last week it was a bit of an inside candle here. We didn't take the high and we didn't take the low. So this means that we're consolidating inside the range and more liquidity is being built above and below the marketplace. Now, going further for the next trading, I'll be looking for the weekly. Also notice the consequent encouragement of last week trading, the premium wick. Price traded very close to it and then repelled away. I would love to see the weekly if we're going to be trading lower, reaching to this sell side liquidity that is in approximate to this imbalance. So this is a high probability draw liquidity. So next week, if we trade higher, I would love to see the weekly inversion fair value gap to provide us with some means of resistance that can send price lower towards this sell side liquidity. Otherwise, we might just start trading higher. Going to the daily chart, as you can see, this week we retraced all the way to the low of this candle's high, which is the fair value gap, and there was also an overlap with the weekly fair value gap. So there's a weekly fair value gap here. If you go to this very small fair value gap here on the weekly chart, it's nested to the daily chart. So this is the weekly fair value gap that is shown here on the weekly chart, this one here. So price did retrace to it, and notice the precision here. So this since we started September, you can see the precision here. Since we're leaving August is being known as sloppy month, and we started September, the charts have been showing us the good signatures of precision. So it traded right just to the low of that fair value gap and started repelling away. Notice that no candles are being trading away from the weekly inversion fair value gap. So you can notice that the candles are respecting the weekly inversion fair value gap and they're just repelling away. And just the wicks are doing the damage here by reaching to the fair value gap, to the weekly fair value gap, and just trading lower. Notice that here when we traded lower, there's a fair value gap here. The high of the fair value gap approximately overlaps with the low of the weekly inversion fair value gap, which is this weekly inversion fair value gap here. From this candle's high to this candle's low, this will make it a weekly inversion fair value gap once we trade below it. So price when still trading below it, here you can see how we've seen a good signature here in price, that price is not willing to trade past it. The bodies are just respecting it to the tick and trading lower. The fair value gap here, the high of that fair value gap is overlapping with the low of the weekly inversion fair value gap. So if price wants to reach higher, to reach for some means of premium, to take this buy side liquidity and to accumulate more buy orders above marketplace, it would go and fill this fair value gap, reach the weekly inversion fair value gap low, and then trade lower to the sell side liquidity and to the sell side liquidity lower that is overlapping with the fair value gap. Going to the NQ, here we have the weekly chart. As you can see, this week we traded higher. We made the high at the consequent encouragement of previous week premium wick. This went to the tick. You can go to your charts and you can look for it by yourself. So we reached to the tick of that consequent encouragement, and notice how the opening of this week, last week, as we start next week trading, this is going to be last week. So notice how we opened here at the last week trading. We basically opened at the weekly inversion fair value gap high and reached higher to the consequent encroachment of the previous week, premium week, and started trading lower. Also, on this week, it has created the inside candle where it has a high that is lower than previous week high and a low that is higher than previous week low. We traded also to the weekly bearish order block, which is this candle, this very candle here, and we started trading lower. So I'm still expecting lower prices, the weekly inversion fair value gap to treat and to offer us some resistance that can send this price lower towards this sell side liquidity, which is previous month low, and towards this sell side liquidity, these two lows here, which overlaps with this weekly fair value gap. So if we reach the weekly fair value gap, I will be looking for three levels that are inside this fair value gap, and they are the high, which is the sell side liquidity, the consequent encouragement, and the low. Going to the daily chart, as you can see, we have a small fair value gap that is shown here. Price can retrace up to it, make it efficient, reach to the weekly inversion fair value gap low, and then trade lower. So the PO3 will be looking like this: manipulation to the upside to take this buy side liquidity to fulfill this small inefficiency and to reach to this weekly inversion fair value gap low. And then once we reach there, the manipulation will be done. We'll be accumulating orders there or approximately near that area, and then distribution towards this sell side liquidity and this sell side liquidity. And if price was really extended towards the downside, I'll be looking for the terminus, which is this sell side liquidity with the fair value gap levels that I've mentioned on the weekly chart. So that's pretty much it what I'm looking here on the NQ. The signature that are telling me here on both the ES and the NASDAQ that price is more likely to be reaching to lower prices. I might be wrong on that, but I'll be looking for lower prices since DXY has been running up higher. So it would be logical to see price on the indices to trade lower. Now, I think I've mentioned that on one of the weekly reviews, but I'll be mentioning it here again, that the relationship between DXY and the indices are not immediate. So when DXY is trading higher, it doesn't mean that the indices are going to be trading lower at the same time. But for the long term or for the long run, the indices are going to be trading lower just to be in sympathy with the DXY. But that doesn't mean if the DXY is trading higher, they need to be trading lower at the same time or immediately. Whereas in the forex market, it will be trading immediately. So when DXY is trading higher, so there's a immediate and direct relationship between the forex market and the DXY. When DXY is trading higher, the forex market is going to be trading lower, as I'm going to be showing you later on in the Euro USD and the pound. So that's pretty much it for the NQ. Going to the Dow, I've mentioned many times in the past weekly reviews that I'm using the continuous contract that is adjusted to the current month contract, which is September for the time of this recording. I'll be mentioning something for the contracts later in the review. So this week was, as I mentioned here, it's a bit indecisive. We took the sell side liquidity of previous week low, and we opened late, like we opened at nearly at the consequent encroachment of this fair value gap. We reached higher approximately to the lower quadrant of this week, premium week of the previous week, and then we started trading lower, taking this sell side liquidity. So I'm still looking for lower prices towards this previous month low and towards this sell side liquidity. Notice that also we swept the buy side liquidity that is here. I mean, that was already on my chart, but I'm just paying you attention that we already swept a significant buy side liquidity. Going to the daily chart, as you can see, we traded to this fair value gap. We fulfilled almost all of it. We have still a very small portion of it that is still stayed unfilled. Notice that we also have here a fair value gap. This fair value gap, the higher time frame, this is a weekly fair value gap. This is fair value gap. This is a fair value gap that's not trading to it. So on the daily, should be said as a weekly fair value gap. Anyway, there's a small fair value gap here. Price can be trading higher, which is approximate to the weekly inversion fair value gap here. Treat that level, the low of the weekly inversion fair value gap and the high of that fair value gap as resistance that can send price lower towards the sell side liquidity. So that's what I'm expecting. I'm expecting overall lower prices in the indices, and that's pretty much it for the Dow. Going to the Euro USD, also known as the fiber, we have the weekly chart here. As you can see, we sold lower in contrast and in sympathy with the DXY as it has traded higher and took the buy side liquidity. On the Euro USD, we traded lower and we took the sell side liquidity. I've been mentioning it since the last weekly review. You can go back when this candle wasn't even printed, this candle here, when we had this candle and I seen this price action. I've mentioned and I have shared that I want to see lower prices. Since we closed below this weekly inversion fair value gap, I want to see it treated as resistance, and we in fact did. You can see that no bodies are inside this weekly inversion fair value gap. The wick was doing the damage by reaching to the consequent encroachment of the weekly inversion fair value gap and then trading lower, taking the sell side liquidity, which is previous month low. Next sell side liquidity is highlighted here as the sell side liquidity, which is at this level to be specific. So there's nothing ambiguous here. I'm sharing what I'm seeing and what I'm preferring here in the marketplace, and it is panning out as I'm sharing to be to the tick. So you can notice how we treated the consequent encroachment of that weekly inversion fair value gap as resistance, and we traded lower, taking the sell side liquidity, and perhaps later on we're gonna be reaching to this sell side liquidity. Going to the daily chart, as you can see here, we traded lower. This low, once it has been done, this previous month low, the sell side liquidity, this can be utilized as a fulcrum point. So we take this high to this low and you project it to the downside. It will give you approximate -1 standard deviation approximately at this level. So you can be sure that, not sure because nothing in the marketplace is guaranteed, but you can be more confirmed that price is gonna be further reaching to lower prices. What can price do in the future? We can see this bearish propulsion block and this small fair value gap. Price can treat them as resistance that sends price lower. We don't want to see price trades all the way up to the weekly inversion fair value gap here that is nested from the weekly chart. I don't want to see price trades all the way up to this low. I want to see price stays below it, perhaps just to fair value gap and then trade lower, maybe an institutional order flow entry drill, or to the bearish propulsion block if it really wants to accumulate more orders at higher prices or at further premium, and then reach lower towards this sell side liquidity. There's nothing ambiguous. I'm not sharing riddles or I'm not sharing hidden messages. It's straight to the point. I'm sharing the levels, the specific numbers. It's not a range, it's not a zone, it's a specific level, it's a specific number that is on your chart. It's printed on, not just on my chart, it's printed on all the charts. Everyone can be seeing it, but it's just hidden in plain sight, as my mentor said. So that's pretty much it for the euro. Going to the pound USD, also known as the cable. Notice how it's the same thing as shown here, how we're trading and taking the sell side liquidity, as we've seen buy side liquidity being swept on the DXY. But notice here that we opened at the low of the weekly inversion fair value gap, traded approximately to the consequent encroachment of it, and to where exactly? Notice this low. As an assignment for you, extend this low to the future. You would see that the high was printed at the low of that weekly inversion fair value gap. What is this weekly inversion fair value gap, Ahmed? This is a fair value gap that is found on your weekly chart. So if you would scroll back, I'm not gonna be doing it, it's an assignment for you. Go scroll back to the past, you would see a fair value gap price has traded and went past it, which will be making it an inversion level. And we in fact, once we traded lower, we treated the low of that weekly inversion fair value gap as resistance, and we made the high at it. So the high was the low of the weekly inversion fair value gap. Don't take my words for it. Go into your charts and dig deep into it by yourself. But we also have more influence the weekly inversion favor gap consequent encroachment of this this gap from this candle's high to this candle's low. The consequent encroachment is also influential here, as we've seen price repel away from once we traded to it, and we took the sell side liquidity, and I'm looking for this sell side liquidity later on to be reached and swept. Going to the daily chart, the same thing is said here. You can notice how we traded to the bearish order block, traded lower. This was Monday's trading. We traded lower here. A retracement to the low of this candle, that's immediate rebalance. This is one of the strongest price action signatures that you're going to be seeing, and this can sense price further than the sell side liquidity that's shown here. So it can be really extended moves towards the sell side liquidity. And we've posted a fair value gap, a little bit of a retracement here on Friday, and we've closed. So notice that we have also a sell side liquidity here that I've mentioned that is not shown on the weekly chart. Now it's shown on the daily chart. We swept that perfectly, and now I'm looking for the sell side liquidity, this low here, and these two levels here, this sell side liquidity and this low. So yeah, that's pretty much it. I'm expecting lower prices here. I'm expecting lower prices on the markets, the indices, and the forex, and I cannot be sure about what price can be doing on the DXY. So I need to be monitoring it and tracking it closely and carefully, and to see what is going to be happening on the DXY. So that's pretty much it for this weekly review. I just want to add some notes, and I want to address some points that regarding the indices or the indices, the ES, NQ, and the Dow. Next week, anytime next week, we're gonna be transitioning from September contract to December contract. So I'm gonna be attaching a chart of how we track it. Now you'll be tracking it through barchart.com. You'll be seeing so there's no affiliation with them at all. You would go to the S&P or the NQ or the Dow. You would compare and contrast the volume of this week's or this month's contract to the next month's contract. When the volume is higher in the next month, you will be transitioning to the next month to contract, because it will have more volume, which means more liquidity and more trading inside of that. So that's pretty much it for this weekly review. I hope you gleaned something from it, something useful, and until I talk to you next time, be safe. Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh.